What's up, everybody? Welcome back. Welcome back to Lucid Trading. And, stocks are going down substantially. I mean, once again, just an absolute slaughter just among growth stocks, right? Growth stocks are doing pretty bad. Even the growth stocks that had good news recently are doing pretty bad right now. And it seems to be related to the Omicron virus. And Joe Biden is was speaking today. Having an impact here on the market. We're seeing the Nasdaq go red, S&P go red, Russell's going red. The only thing really up right now is the Dow Jones. And, we're just seeing, whatever we saw the past couple weeks, it is continuing here, although I don't think that it's getting a whole lot worse than what we saw. We're just kind of giving back the gains that we've seen over the past couple days, over the past couple weeks. And I don't think this is going to turn out to be some massive crash in the coming weeks. I think we're most likely seeing the dips right now, just dipping out a little further. And I still do believe that these are the buying opportunities. These are not the moments you want to be selling. These are the moments you want to be dollar cost averaging. Still think that is the best opportunity to be dollar cost averaging is right now. I think most people, at least what I've seen, most people will kind of go all in at a particular price, which is not a good thing to do given the fact that you don't know whether stocks are bottoming out or topping out. But that's what we see a lot, is where people just buy in at a particular price and they just go all in. And they don't go all in, they go all in. They go full on margin on that, which is problematic. I've always been saying, going all in is the most stupid thing you can do right now. You want to have at least 20 to 30% cash around. You want to be dollar cost averaging into these great businesses. You don't want to go all in at a particular price. As the price goes lower, as you're getting a discount, you want a dollar cost average. And I think a lot of people have lost that ability, that capability to be dollar cost averaging, because a lot of people are all in. But yeah, that's currently where we're currently standing at. This is pretty much the phase that we're in right now. Stocks are going down, still going down. Been like 2 months now of just like gradual downside. People are overly bearish. Somebody saying here in the chat. Speaking of the chat, welcome back to Unai, Arcool, Yopity, Lenny Reynolds, Tom G, and the band who sued, and Lander. Welcome back. If you just joined, do make sure you smash that like button. That would be very much appreciated. Vincent says, hey, Gara, lots of fear-mongering over Omicron. In fact, Omicron will completely drive out Delta variant, which is far more deadly. Yeah, the problem with Omicron is that it's very, very fast spreading. It's much more faster in spreading itself than the Delta variant. So it could be problematic in the short term. But yeah, I think over the long haul, this would potentially be much better than Delta, because Delta is, from what we've seen, much more deadly. But short term, we're seeing the market get affected by this in a negative manner. I mean, you can't make this up. If you had come to me like 3 months ago, you'd tell me that NEO was going to be sitting at 29, or that Palantir was at 18, or C3 at 32, or Robinhood at 17.5. I would be laughing. But here we are, right? So we're getting these levels. And then the question is, like, how are you going to react to this? Are you going to be very fearful and you're going to sell the bottom, right? You're going to sell Robinhood at 17, or are you going to sell Virgin Galactic at 13 or Palantir at 18? Or will you hold through? Are you going to diamond hand this and hodl through? I really think the latter is probably the best thing to be doing right now. But yeah, that's where we're currently standing. Lots of downside. Meanwhile, big tech obviously been doing pretty well. Apple's barely. It is sitting right at all-time highs, pretty much. It's sitting like 1.5% below all-time highs. Microsoft, same story, right? Sitting very close to all-time highs. Google, Amazon, very close to all-time highs. I would say Amazon is still down about 9%, and Facebook still down about 10% from all-time highs. But yeah, so far so good. The sell-off continues. The dip keeps on dipping. And it's all on you. Are you going to sell the dip, or are you going to remain calm and collected? And are you going to diamond hand this? Because I've seen some people sell the dip, and they're up short term, right? Because if you sold a couple days ago, you'd be selling at a higher price than where we're currently at. But those people have no exposure to these growth stocks anymore. And if we do see a bounce, going to be completely left out. Of course, we can't tell when we're going to see this bounce potentially happen. But I think as soon as early next week, as soon as we get into January, we have the tax harvesting in the past. We have the window dressing is going to be in the past. Hedge funds are going to be done window dressing, which is going to help out a lot. South African numbers show Omicron on the way back. Okay, interesting. NEO needs to list on the Hong Kong exchange to get away from this manipulation. No. NEO needs to show us that they're capable of delivering more vehicles than freaking XPeng and Li Auto. I mean, it's just their deliveries have been lacking. Let's be really honest. NEO's deliveries have been lacking. The only reason I'm buying NEO right now is because I think that NEO is they're gonna have better deliveries over the coming months, not worse. And if they don't report better deliveries, I will get out of NEO. Just to be frank, I am buying this stock because I think they're gonna gradually get back up on track because they've been hit with the supply chain issues more than other companies out there like XPeng, and they've also been changing up the manufacturing line, which has been impacting their deliveries. So that's what I think. I think we're probably going to see higher deliveries over the coming months. But yeah, we'll have to see. I think in a couple more days, we'll get the delivery numbers for NEO, which is going to be quite important here. If I look at investor relations for NEO, if I can quickly grab that with me, I don't think they've reported anything yet. Yeah, so the last time they did a delivery update, that was the 1st of December, and that was for November. So they delivered 10,878 vehicles for November. That's about 105% year-over-year increase. We want to see much, much higher than that when we get deliveries reported here in a couple more days, which should be... I expect them to report deliveries on Monday, the 3rd. That's my expectation. But we'll see. Maybe it's going to be Friday. It could be Friday, but I doubt it. Would be fun. Would be great. Yeah, a couple more days left until we know what is happening here with NEO, obviously. Which it's just gotten slaughtered, pretty much. That's the right word. NEO has gotten slaughtered. It's been getting wrecked. To be honest, I mean we're at the lower bound of the lower bound. We're sitting on the if there's a trend line at all, yeah, we're not sitting at 23 yet, but we're definitely not doing so well here. Below 30, below the 100-day moving average. I think we had to grab the daily. Yeah, there you go. You can see that the MACD is about to be crossing, which is, I would say, quite a positive development on the technicals. 4-hour chart. A bit of a bullish divergence going on. 1-hour chart. Just consolidating. So yeah, we're going to have to wait here. Lucid is down 4.1%. Rivian is down 3.8%. NEO is down a percentage point, obviously. Tesla doing pretty well still. C3 down 2.7%. Jeez. Palantir down 2.3%. Snowflake down 3.2%. Oh, man, it is rough out there. S&P is barely down. It's the value stocks that are holding up the S&P right now, I would say. Then we look at what is going on down here. We have Robinhood sitting at 17.6, like I said previously. We're sitting at all-time lows. All-time lows in Robinhood, and nobody's buying the dip. Everybody's selling. Everybody's shorting. And I honestly think that once we get a piece of good news, doesn't matter what it's going to be, whether it's like the crypto wallet news or Shiba Inu getting listed, just a tiny bit, we're going to see I think probably a short squeeze. We don't know what the short interest is looking like right now because the last time they reported it was at the end of November, but it's probably really, really darn high, given the fact that, keep in mind, I'll just show you right now. End of November, that is right here. Right here, the short interest was 7%. 7. And since then, look what happened to Robinhood stock. Do you think it's still 7%? No freaking way. It is much higher than that. It's just they don't really report it that often, unfortunately. And what we also see is like right before the date that it gets reported, we might see a lot of covering of shorts. That would be great, but I think we're probably sitting at like 10% plus short interest right now, with the stock down like 55% from that level. But yeah, I think Robinhood is still a great company. I think they're going to do pretty well into the future. I see them doing like at least 100 million customers over the coming years. They have like 23 million, I think, right now, 25, something like that. And I think they're going to be growing internationally at some point too. So I think it's $17.6 a share. Robinhood stock is a steal. I would be dollar cost averaging this all the way down. If it goes to like 15, I mean, that would be phenomenal. Currently sitting at a market cap of $15.1 billion, which I think is a steal. They do have a lot of debt on their balance sheet. I don't like that necessarily. They have a lot of assets as well. I mean, I can't believe it, right? Like just a couple months ago was trading at like $60, $70, $80, even going down all the way to 40, which was acting as support, right? Around $40. And then we had the massive lockup period expiration. So we had pretty much went from like, I think 70 million shares available, or a 70 million total shares public float to 700 million, which is incredible, right? That is a big difference. And that's where all this selling pressure really has come from. And it's very easy to short it as well for these institutions and hedge funds to essentially to hedge against the market by shorting Robinhood. While you see these lockup period expirations happen, because these investors that have been holding Robinhood just want to sell their Robinhood stock. At the beginning of this year, Robinhood was valued at about 12 billion. It's now sitting at 15 billion. So these insiders are making a ton of money by selling at like the current price, which is also part of the reason why it's sitting so low. They have no reason to hold the stock. There's been so much negativity, right? With the class action lawsuit, we had the hacking. Robinhood got hacked. Crypto wallets got delayed. Shiba's not getting listed, not yet at least. Earnings were pretty bad. So not a whole lot of reason for these insiders to hold the stock short term, which is why I believe that whenever we do get that good news come in here, the stock could do pretty good. With pretty good, I don't mean it's going to double. I mean, let's be clear here. I think it's going to, go back to 25, 27 eventually. But for the stock to double, I think we're going to need like an array of really good news back to back. Gara, why has the Russell been sideways for the last 12 months? Well, look at this. I'll give you something, right? Look what happened to the Russell. So you can see this right here. From November until about March, which is roughly around a quarter, 4 months-ish, it went up 53%. So the Russell did really, really well for quite some time. We had the Russell doing phenomenal. But in that same time period, right, let's go back to November of 2020. What was the NASDAQ doing, right? What was the NASDAQ doing from November till March? November till March, right? Let's just grab the highest point. The NASDAQ went up like 18 percentage points. That is nothing in comparison to that 52% run-up that we've seen in the Russell. So the Russell has already seen that extension. We've already seen the growth stocks kind of rally. And for the most part of 2021, we've seen the Russell kind of cool off, which makes sense. And I think it would be very unhealthy for the Russell to just go, parabolic, just keep going upwards. That would have been kind of crazy. So it actually does make a lot of sense that the Russell isn't, that it is not necessarily just going up perpetually. So I think it's a surprise that we're not seeing the Russell go down after that 50% move that we've seen from November till like March or something. So I welcome this consolidationary move. I think it's healthier for the Russell to be consolidating than for the Russell to just keep on going up parabolic. That would be this sign of a bubble, right? Just going up and up and up and up, just like the .com. But we didn't see that happen, thankfully. And we're just consolidating, and I do think we're going to see more upside in the future. It's just most of the gains have already been priced into the Russell, in my opinion. You don't just see a 50% move in an index in 4 months' time. Like, you have to understand this. When you see a 50% move in an index in 4 months' time, the first thing that should pop into your mind is bubble, .com bubble, right? Back when that .com happened, I think in 6 months or something, like the Nasdaq just doubled. I mean, that is crazy. So that's why the Russell's been going sideways. I think it's just been correcting for the fact that we've seen such a large momentum move from November till pretty much now. Really, it's still been sitting quite high. But I think it's pretty harsh when the Russell goes down 15%. That is, I think, quite the retaliation. But I think the reason that is the case is also that the smaller caps get affected much more when stimulus goes away and when rates go up. It's the smaller companies that are going to suffer. The larger caps, however, tend to still do good, right? They have a lot of resources to get through tough times. So I think that's also one of the reasons, right? Pricing in the fact that interest rates are going to go up in the future. You got Omicron affecting small caps more. Stimulus is going away. Quantitative easing is going away. These are all very negative headwinds for the small caps relative to the bigger caps. Your stock picks like AI and Hood seem to go down the most in the whole market while the S&P is at all-time highs. Can you make a video where you explain how and why you pick a stock? Just outline your strategy portfolio and returns to avoid haters. I'm not going to avoid haters. Haters can be there, but if you are disrespectful, I will ban you. That is how it works. And I will be making a whole course about this. So if you want to check that out, it's going to be on the website very, very soon. How I pick stocks, how I look at stocks, pretty much everything I do is going to be condensed into a course very soon, which is going to be on the website very soon as well, lucidtrading.net. In all honesty, if you watch the streams and you know what I'm doing, right? I'm looking at fundamentals. I'm looking at earnings. I'm looking at the balance sheet. I'm researching the CEO, the management. We research the product lineup for companies and where these are going to be headed. I even tested the C3.ai software, the Palantir software, a couple months ago in the summer. And so you really want to know everything about the company. The more information, the better. You can make better conclusions off of more information. And it's not just more information. It has to be like the right kind of information that you need for your specific strategy. And it's also about the macros, right? You could really just research the macros of the economy like 24/7. Get down to the nitty and gritty stuff. Things like the CPI and the PPI, the manufacturing index, and there's so many things you can take a look at. And these are usually lagging indicators, right? It's like it's giving you an indication of where we were, and that could potentially tell us where we're going to, too. Let's see. NVIDIA down, sitting at 305, still sitting pretty high, though. AMD at 154, still sitting pretty high, in my opinion. I don't like these stocks at these prices. Way too expensive. Gara, what top 3 stocks would you buy now for a long-term play? Okay, so I would personally, right now, I'm looking at for the next quarter or two. I'm not looking at the next 5 years necessarily, but I take into account the next 5 years for my swing trades for the coming months, just to kind of guys at the potential valuations of these companies. Because, with the interest rates happening, I think a lot of things are going to be quite uncertain here. A lot of stocks are going to be behaving very sporadically. But 3 companies that I really like right now, the current valuation, I would have to go first off with Robinhood at 17.6. I think you're getting a lot for your buck right now with Robinhood at 17.6. And let me see. Bumble at 33.2, not looking too bad either, I would say. My third option would be Neo at 29.78. I think these are the three stocks that I'm most bullish on for the next coming quarters, as interest rates are not sitting very high or going to be sitting very high yet. But yeah, when interest rates go up, it's going to be quite tough for me to say what I want to be buying. It's going to be, I think, primarily value stocks. Let's see. Omicron will test AMC next year. Headwinds for 2022. Joe Biden health rates. Joe Biden health rates, hikes, elections, midterm, Fed. Virgin Galactic has bottomed. Check the chart. You'll be happy. Yeah, I think Virgin Galactic probably has bottomed. It does seem like it's not really going anywhere below 13.7 to 13.6. And really, with Virgin Galactic, you're looking at like, we need something to get this going, some positive news. And I think it's going to be earnings. Earnings is going to be coming in a couple months, I believe. I think it's going to be in February. It says it's in March, but I think it will be in February, their earnings, early February, which is going to dictate where the price goes. If they have some kind of news like, oh, we're going to do a test flight, or the flight that we got, the commercial flight that we were going to do in December is going to be earlier, then that could really move the stock. But this would be more of like a 6-month to about 12-month hold, potentially, at this point. I mean, again, just look at that chart all the way down. Jeez. Lucid and Costco. I don't really like Lucid. There's going to be a very, very large lockup period expiration for Lucid, by the way. I don't like Lucid right now. Not at all. I think it's going to sell off significantly at the end of January because of the... I think it's the PIF, the PIF. The Saudi Arabian fund that is going to be selling a boatload of Lucid, I think, at the end of January. I really don't like it at the current price. It's too expensive. 61 billion market cap. And what are we getting? No revenues. Yeah, well, at least Neo has some revenues, right? I'm very glad about that. They at least have like 6 billion a year in revenues, although burning quite a bit of cash too. But they're burning about the same amount of money that Lucid is burning, but they're making 6 billion in revenues. Around 6 billion, right? 5 to 6 billion. And who knows, maybe in the coming quarters they're going to even make more. But people are avoiding Neo because of the fact that it's a Chinese company and the fact that I guess people are afraid that Neo is going to get delisted. But in all honesty, that fear has been here for like 3 years now, and they have not gotten delisted. You know, even the company that is most likely to get delisted, which is DIDI, and they said it was going to get delisted, it has not gotten delisted yet. So we'll see how that's going to turn out to be. There we go. Are you going to short Lucid? I think I would short Lucid if it gets back to like 50 or 60. But right now, I don't want to short Lucid. I do think it might go down here, maybe to like 30 or something. But I think that is not really worth the risk. Palantir, most bullish stock. Not necessarily. I mean, I think it's going to do pretty well into the next months, but right now I'm not getting any like strong indicators here. You know, the MACD crossed, but the price is kind of going flat. Weekly chart. I mean, we're not oversold yet, so it's just kind of going sideways. I think that's the first time we're seeing this behavior from Palantir. It's kind of similar to right here, maybe. That was like end of July, beginning of August. Yeah, Palantir doesn't really like to go sideways, but it's happening right now. It's been how many weeks? It's been a whole month of just sideways. Yeah, 18.5. Market cap of $37.2 billion. Yeah, it's doing all right. Richard just became a Lucid Explorer for 3 months. Thank you so much. That is awesome. Do you think Square is going to 280 to 300 in 2022? Good question. I have no idea. Let me take a look at the technicals. 280 to $300. That's back to all-time highs in 2022. Well, we know that Square benefited from Corona. They definitely benefited from the whole COVID situation. We also know that their earnings are coming down now. So that benefit that they've had is, they're seeing less of an impact now at the end of 2021. But yeah, I think Square could definitely recover back to like 260, 280. I wouldn't be surprised if that were to be the case. Or I would say Block, right? It's now called Block, but still has the same ticker, SQ. I mean, let's see how much they've gone up from January till now. Okay, so January was sitting around... Okay, so it's down, right? So it's down 25%. If you would have bought Square at, beginning of the year, you would be down 25%, something like that. And that's like the lower level. So at the height of 2021, it was up 32 percentage points. Interesting. So most of the upside we've seen in 2020. Because, you would just grab the all-time high right before COVID, then you go back to the end of the year. Yeah, you're looking at like almost a tripling of your capital in Square. And right now it's just kind of selling off. I think what really matters is like the guidance. Like, how is the guidance looking like for Square? And I would have to know a bit about that. I'm going to quickly see if we can get some of that. Investor relations. Let me just quickly grab that. Square. They changed their name to Block. I'm going to check their third quarter results real quick. Okay. Quarterly results. Shareholder letter. Okay, here we go. One sec. All right, so this is their third quarter earnings, right? Let's see. I want to check what their guidance was. Did they deliver anything of significance? Webcast, October trends, and forward-looking commentary. See, this is what we're looking for. Looking at like 2022. We want to see if they have anything to say about the future. October trends and forward-looking commentary. We wanted to provide an update on the trends in our business during the month of October. We believe 2-year compound annual growth rates from 2019 through 2020 will reflect underlying trends in each ecosystem. Hold up. Okay, so they're talking about like next quarter earnings. Okay, so 55% growth year over year. That's pretty good. Okay, so share-based compensation is going to go up slightly, not that much, apparently. They're going to be growing at 55%. An aggregate increase of approximately 1.16 billion of such expenses. Wait, that's their expenses. Okay. Right. Yeah, they're talking a lot about the third quarter, not giving us any insights. Oh, there we go. Let's see. Yeah, this is all really useless. We're getting like information like that we already know. You want to get some guidance. Something that they're saying that, you know, we could potentially see some growth in. We could also take a look at the balance sheet. Kind of see if the market cap makes any sense relative to the balance sheet and everything, but not a whole lot of guidance. I mean, with C3.ai, we got like proper guidance. You know, the CEO just basically saying we're gonna get a bunch of government contracts and growth is gonna be above a certain percentage. We're not really getting the same with Square or Block for that matter. All right, let's take a look at the balance sheet. A little bit of information here. Total assets is 13.9 billion. Total liabilities 10.9 billion. That's interesting. Consolidated statement of cash flows. Okay. Okay, so loans 2.2 billion. Cash and cash equivalents. Net increase in cash 1.4 billion. Cash and cash equivalents 4.6 billion. Net income loss. Are these the segments or? Okay, so non-GAAP operating expenses 906 million. Yeah, they're losing a lot of money. But it makes a lot of sense, right? They're growing rapidly, so you want to be spending as much as you can to really hold up. So they did say recently that they were going to burn about $1.16 billion extra. I think it was... Where was it again? Was it right here? Yeah, there you go. Operating expenses. So their expenses are in aggregate going to be increasing by about $150 million. Oh, oops. Why am I getting that noise? I don't like that. Okay, so, whoa. This translates to an aggregate increase of approximately 1.16 billion for such expenses in the full year of 2021. Oh, okay. So I thought for 1 second right there it was like for just quarter four. That would be insane. An increase of 1.16 billion. That's for the full year. So it's about... That's not bad just to get an increase of $150 million for just the quarter, given the fact that the total increase was 1.16 billion for the year. Okay, so their costs are growing obviously because they're growing you need to spend money to make money, essentially. It's not always like that, but usually it is like that. In October, we expect Cash App to deliver strong gross profit growth year over year, and then on a 2-year CAGR. Wait, let me see. Is that a cumulative annual growth rate? I have no idea. Probably mean that. A basis driven by growth in monthly actives, engagement across our ecosystem, inflows into Cash App. Okay. So they're talking about October, because that's probably what they're only able to talk about right now, or back then. Yeah. Adjusted EBITDA. Yeah, that's a big difference. Gross profit grew 43%, which was 51% on a 2-year compound annual growth rate. Oh, compound, right? Not cumulative. Compound. It's kind of the same meaning. With more than 16 million customers or consumers and approximately 100,000 merchants. See, this is why I think Robinhood is potentially just undervalued right now. I mean, Block having like 16 million customers or consumers, like we have, I think Robinhood has like something like 18.9 million active like monthly users. That's a lot more, and I think they could really do something with that. I think we have about 19 minutes left until the market is going to close here. And what I just quickly want to do is close that. I want to get back to the charts. Yeah, I think Square, there's a good shot of Square like getting back to the all-time highs. I don't see why it shouldn't. It's been growing steadily. Their balance sheet is looking, it is looking fine. It's sitting at a market valuation of about $75 billion. Really, I mean, it's sat at like almost double that recently. Doesn't necessarily mean anything, but on a technical basis, look at the RSI. I mean, weekly chart looks like the RSI is oversold. Last time it was oversold was when we had the pandemic start and kick off, and if you would have bought back then, you would be very happy right now. And I think the same thing is going to be true. I think Square is probably going to get back to all-time highs in maybe summer of 2022. It will take some time, if you would extrapolate this move right here. Let's see. It takes some time for stocks to go up, right? So I would say probably by around the summer, I do expect this to be sitting close to all-time highs, around 250, 260-ish. Should be reasonable. If the, GDP growth is going to be steady and, we don't get some kind of market crash because of rates going up substantially. But I don't think there's a whole lot to be worried about here with Square. From all-time highs down about 43%. I don't know if I have put this in the buy and sell signal list that we have on Patreon, but I am going to be putting that into the buy and sell signal list on Patreon. I think Square's pretty phenomenal. I'll do some more research on this before I do that, but they're doing pretty well. I think what's really ugly right now with Square is essentially, if you compare the past couple quarters, you can see it went from 5 billion revenues, 4.7 billion to now 3.8 billion, which is significantly lower. You can see that the net income is going down and could potentially go negative again. But yeah, I think Q4 is probably going to be good, right, for Square. When is earnings going to be? So I think early February, right? So something like that should be right here somewhere. Yeah, I think it's going to do pretty well. I do expect it to get back to like $200 by then at least. Just all the way up to 200 bucks. Should be doable. That's like a 20% increase, right? 25%. Jack Dorsey is a genius holding Square. Yeah, I agree. I think they're going to do pretty phenomenal. It's a good stock to be holding. Are any of you guys considering buying the dip on Palantir? I have bought the dip in Palantir, and I am waiting patiently. Hello, Gara. Could you do a technical analysis for Neo? I think I've done it like at least 20 times. But I think, Neo, the only thing that really matters right now, it's not the technicals. It is, can they deliver us good deliveries? Are we going to see proper deliveries, or are they going to disappoint us again? And so that's what we're waiting for. MACD's looking pretty good right now. Could cross. Momentum could really just kick in, and we could see it go up maybe up to 35, in the coming weeks. It is a possibility, but we need to get a positive headline. 1 second. All right, we have about 15 minutes left until the market is going to close here. 15 minutes. Tesla sitting at 1,093.8, which I think it's super expensive. One second. We got a $4.9 donation from Patrick. Patrick says, "What is the best buy to dip stock right now for a quick return?" Thank you for that donation. I would say that if you're here for a quick return, then I guess you can use the stock market as a casino. I highly advise against it. But a quick return, I mean, what depends? It really depends. Like, what is quick? Are you looking at getting a return instantly? Well, I don't think you should be doing that in the stock market. I think day trading is very difficult, even more difficult than picking stocks and holding long term. But I do think there are some stocks out there that are going to do pretty darn good in the coming months. And I am focusing right now on Robinhood. It's sitting at a $17.5 per share price, right? Very cheap, all-time lows. I think the business fundamentals can improve quite a bit, given the fact there's been a lot of trading going on the past couple months, and I think we're going to see more coming up in the coming months. So Robinhood is looking pretty sweet at 17.5. I think it could just jump all the way up to 27 in the coming months with not a whole lot of difficulty. And I'm also looking at stocks like Bumble, which has been beaten down quite significantly, sitting at 33.4 right now. We're already seeing a bit of an uptrend short term, right? A bit of a trend going on here. Higher lows, hopefully, and higher highs. I think we're most likely going to retest that $38.7, $39 level very soon, which if you'd buy right now, that would be about 16%, which is not too bad. And I'm also looking at Neo right now as a buying opportunity. It's sitting at 29.7. If deliveries come in hot, we could see Neo really surge, maybe possibly back to like 35 or something, which has been a big resistance recently. So those are really the stocks that I'm looking at. I'm also looking at Palantir, C3.ai, and other stocks. Square looking pretty juicy too. But these are the stocks that I'm kind of looking at right now. Hold up. There we go. Check out Disney, Gara. It's been going up. Really? Has Disney really been going up? Oh, yeah, look at that. 155.4. Yeah, I mean, we've covered Disney at 140. I think I said it back then, that it was looking like a good buying opportunity at 140 and below. And there you go. It's sitting at 155. I think Disney's going to do quite good in the coming months. We got peak spending going on. There's a big gap to be filled at 170, about 173.7. So yeah, Disney doing pretty good. It is up about 9.4% from the bottom. That's in about a month, which is it's only fair. Richard coming in here with a $2 donation and says, "Thank you for all your great information." No problem. Thank you for that donation. Yeah, with regards to Square, I mean, I really like the stock at 164. I think if it gets back to 150, I would start buying quite a bit. But short term, there's a lot of negative sentiment around anything that has like growth or lower net income. What's really popular right now, Steve, I think for the hedge funds right now and institutions, they're just buying companies that have a boatload of net income, and just the value companies right now. Those are really popular. People are going risk off because of the interest rate hikes that are coming up, which who would have thought that that Jerome Powell would have said, hey, we're going to raise rates earlier, much earlier than expected. That's why we've seen the sell-off that we've seen. I think that's a big part of the reason that we've seen growth stocks go down again, back to back. But I think it's not going to be an endless spiral of selling. That's never how it works, right? So I think it's really frustrating that people don't get this. Stocks don't only go up, but stocks don't only go down, right? So it's both ways. They don't only go down. At some point, they reverse back up. And if you're not holding that stock, you're going to miss out on tons of gains. But we'll see if that's going to be the case. Maybe people are going to be right. Maybe the stock market is going to crash and the world is going to end. We'll see about that soon enough. All right, we have about 9 more minutes left. Hold up. 9 more minutes left until the markets are going to close. Hold up. Let's see if we can grab this little trend line. Thank you very much. Let's see if we can copy paste this. Okay. Horizontal array. You can see the MACD has recently crossed on the NASDAQ. It doesn't seem like it's going to stop, really. It seems like we're going to see even more upside, given the fact that we've breached this resistance, right? There was a big resistance around 16,450, and we've gone above that. And it looks like we're using that level now as support, actually. Past resistance becoming support, essentially. And we could be looking at potentially just like a rally all the way up to like the 17,000s at this point. I don't think there's a whole lot of negativity going forward. So there's quite a high possibility. There's a very high probability that we're just going to see even higher levels. And that's primarily going to be for the big tech companies, the larger caps, unfortunately. Patrick Lamb coming in here again with a $5 donation and says, "How low could Robinhood go?" Somebody's saying here that you will agree that the so-called Christmas rally is not happening this year. It already happened. That's the joke. It already happened. It's just it's not happening for The Santa rally didn't happen for stocks that are being held by retail. You got to understand this. Apple went back to all-time highs. Tesla's just skyrocketed. Big tech went up substantially. You can see how much the Nasdaq went up just in the past couple weeks, or in the past week. Really, in 1 week, we went up 7.4% on the Nasdaq. If that is not a Santa rally, then I don't know what a Santa rally is. That is a Santa rally. It's just not in the stocks that retail is holding, right? So the majority of people are stuck in very small companies and just these popularized stocks that really didn't matter 2 years ago, but now are suddenly really popular. I think the majority of those stocks are going to go to zero, right? A lot of them are going to go to bankruptcy. But I think the stocks that I'm holding right now, that I'm covering right now, have very bright futures ahead of them. They've got solid fundamentals for the coming years, and I think are looking at substantial discounts. Basically, I'm saying other people are wrong and I'm right, and I'm pretty sure about it because I've been doing this for 7 years and seen this stuff happen over time. I've seen Tesla almost go bankrupt. I mean, I've seen some things in the market, some really wild times in the past. But yeah, so how low can Robinhood go? I think Robinhood can go as low as like $15. Like, that is a possibility, given the fact that at the beginning of this year, Robinhood was valued at like $12 billion, right? They did a round of, I think they did a funding round. Robinhood was valued at like $12 billion before the IPO at the start of the year. And that was the valuation. It's now sitting at 14.99 billion, which if you would subtract about 20%, you'd be sitting at like 12 billion. So that you're looking at $14, about $14 to $15. I would say that is the absolute lowest point at that point. I would be very surprised if we get there, given the fact that it's already sitting quite low. I think just because it was sitting at 12 billion at the early part of this year doesn't mean that we're going to get there again. We could see big updates coming out for Robinhood. In the first quarter, we could get the crypto wallets, the Shiba Inu get listed. There's a lot of things that could really help out here with the stock price. But yeah, so far it does seem like it's selling off more than most stocks out there. But, Upstart is also going down 7%. Wish is down 5%. Peloton down 4.5%. The bleeding is continuing in other stocks as well. It's not just Robinhood, but I would say that it's primarily Robinhood here that's getting smacked just back to back to back. We have 3 more minutes, by the way, until the market is going to be closing up. Albi Panjo donating $2 here. Thank you very much. Do you think Nano Dimension is going to go to zero? No, I don't think Nano Dimension is going to go to zero. That's the fun part about Nano Dimension. They have so much cash on their balance sheet. I don't think they're going to go to zero. If the stock market crashes, they could get close to like maybe half the current market cap. I don't see that happening. So I think Nano Dimension is going to do pretty good because they have so much equity. They've got so much cash on hand, and I wouldn't be too afraid of that going to zero. I have a little bit of doubt of like BNGO because BNGO has significant less capital, but they're sitting at almost the same market cap as Nano Dimension. I would be long Nano Dimension earlier before going long on BNGO. Why is it bleeding? We're seeing tax harvesting, window dressing. People are still kind of pricing in the rates that are the rate hikes that are coming up. But yeah, we have 2 more minutes until the market is going to be closing up. NASDAQ down about 0.55%. Looks like it's using the previous resistance as support now, which is potentially bullish. S&P hit an all-time high, now sitting at 4,787, down 0.14%. It's only the Dow Jones that's green. Russell's down 0.5%. Look at ARK, down about 2%. And the VIX is up slightly, nothing too much though. I think the volumes are quite low right now because of the holiday period. I think we should see quite a bit of volume get back into the market here in January, right? In the coming weeks, I do expect massive momentum, especially in growth stocks. We're also seeing that Omicron fear, spiral out of control again, unfortunately. 10-year yield is up about 0.5%. Cryptocurrency is still selling off. Look at Bitcoin down about almost 6%. Ethereum down 5.3%. Cardano down 6%. Dogecoin 6% down. My little altcoin that I've been buying is up 8%. That's very nice. Coinbase sitting at 261. Yeah, smash that like button, by the way. We don't have a lot of people hitting that like button right here. Smash that like button. Let's get it going. Let's get to 100 likes. That'd be fantastic. All right, there it is. Markets are closed. That was all that we're gonna get for now. Looks like a bunch of stocks that we cover are absolutely slaughtered. But you gotta keep one thing in mind. Right? Robinhood, just an example, sitting at 17.46. If you go back to the 17th of December, we were sitting lower. We were sitting at $17 at some point. So I wouldn't say that we're getting much worse here. I think we're still consolidating. Same with Virgin Galactic. We're just kind of consolidating. Yes, it's a negative day today, but we're just giving back the gains that we've seen the past couple days. So it doesn't have to necessarily get worse. It's just, I think a lot of people that are holding margin and leverage, those people are going to have a tough time, because when you have these downturns, you get margin called, and people with leverage can get wiped out real fast. So yeah, that's what I would say about that. Netlist is still sitting at 6.2, still looking good. Uber sitting at 42. We were screaming that Uber was a buy at 35. SoFi sitting at 14.8. I think SoFi is also looking quite cheap. UiPath at 43.86, still doing all right. ChargePoint, Beyond at 66.36, still looking very cheap. All I can say right now is we're seeing so many buying opportunities. It's just most people don't have capital left to be buying, unfortunately. Snapchat 47.7, Sheg 29.3. Let's see, Baba 114, also sitting very cheap. And it's actually, we're seeing higher lows now, which is quite good. Okay, let's scroll up a little bit. Palantir at 18.5. C3 32.4. Yeah, I might do a little bit of an update to the buy and sell signals that we have. There's a couple stocks that I'm going to be adding to the buy and sell signals, and it would probably be Square/Block. I want to be adding Etsy, maybe even Enphase. I want to add probably Disney. I'm going to have to take a look at some value stocks. There are some value stocks that I like, and that can be quite handy in the next year or two, given the fact that rates are going to be going up. So I'm going to start focusing a little bit more on some of the value stocks out there that are sitting at discounts with good fundamentals. But yeah, this is the market right now. Especially cryptos got hit really hard today. Cryptos were getting destroyed. But it's not just cryptos. It's just assets with high risk, right? High risk assets are getting hit today. And yeah, cryptos are risky. Growth stocks are risky. Stocks with high multiples, risky. Those got wiped out. What happened with the recovery stocks? Not that much. All right. Alrighty, we're going to be wrapping up the stream. Thank you for watching. Thank you for being here. I think we're going to get some huge momentum swings in the coming months and the coming quarters. It's the perfect time to remain calm and collected, and to not panic sell, and to not be fearful, and to not be worried, because that's what everybody else is doing, right? Everybody else is doing the panicking for you. So you have to keep in mind, stocks don't only go up, they don't only go down, right? They don't only go down. It's not how it works. So these are temporary downswings. We have temporary upswings. There will be light at the end of the tunnel. I'm very, very confident that the stocks that I have chosen in the watch list are going to outperform the market very soon, and by a significant margin. That's a bold thing to say, but I think Bumble, Palantir, Robinhood, C3.ai, Neo, these are all great names with bright futures ahead of them, great fundamentals, and I think they're going to have a fantastic run for the next decade, really. It's just about at what price are you buying these, right? You could have bought Neo at 60 and you'd be down 50%. You could have bought Robinhood at 80. You'd be down 80%. So you want to find the right price. You don't want to be overpaying, and you want to be patient. You want to be calm and collected, and you want to ride the wave when the wave comes and not miss out, right? Don't miss out on the wave when it comes. And I think it's going to be coming up very soon, probably early January. The window dressing is going to stop. We're going to see the tax harvesting probably stop as well. And I would say the 3 rate hikes that might be coming up in 2022 would be fully priced in too. We don't have a lot of negative headlines either. So yeah. All right. Thank you so much for watching. Thank you for being here. I appreciate everybody out there. Make sure you do hit the like if you enjoyed the stream. Subscribe to the channel if you haven't done that yet, and hit that notification bell. We're going to be back tomorrow. We're streaming at 8:45 a.m. to 10:30 a.m. Eastern Time for market open, and 3 p.m. to 4 p.m. for market close. That is Power Hour. Yeah, I'm looking at uploading a video tomorrow. I want to be uploading some videos, actually. We'll see if I get to that, on some stocks that have been incredibly oversold. See if we can get that going. We also have social media. Check out the Twitter, Instagram, and the Discord community. Links are down below in the description. Check it out. Very active on Twitter and Instagram, so you might want to follow there. Actually, I think I uploaded something on the Instagram just recently. We can check that out. Yeah. About investor morale and psychology. So you want to be checking that out. Check out the Instagram. Check out the Twitter. Check out the Discord. All the links are down below. Have a very, very great day. And if I don't see you, then have a great 2022. I think 2022 is going to be our year. Despite all the headwinds we have seen, I think we're going to have some great times ahead of us. It's all about staying calm and collected, having the patience, and to hodl and diamond hand. All right. This was Lucid Trading. We'll be back tomorrow.